Thanks for your patience, everyone, and thanks for taking the time to join us today. And welcome to this webinar on the Global Innovation Lab for Climate Finance, or the Lab. My name is Ben Brochet, and I'm the Program Manager for the Lab, and I'll be moderating what should hopefully be an engaging discussion today. I'm joined here in San Francisco by my colleagues Alex Clark and Caroline Hallmeyer, both analysts in CPI's climate finance practice and members of the Lab team. For those of you who aren't familiar with Climate Policy Initiative, or CPI, we serve as the Secretariat for the Lab, and with deep experience in policy and finance, CPI helps governments, businesses, and financial institutions drive growth while addressing climate change. We're a global institution with offices in Brazil, India, Indonesia, Kenya, Europe, and the US. Moving on to the agenda, the format of this webinar will be a half-hour presentation which will cover an introduction to the lab, brief case studies on successful lab instruments to provide some deeper context, a quick summary of the lab's impacts to date, and an overview of the 2018-2019 call for ideas. The presentation will be followed by a question and answer session. All attendees will be on mute, but you're welcome to submit questions at any time by typing them into the chat box, and we'll then address the questions during the Q&A session. We're also happy to answer questions via email after the event. As a reminder, this webinar is being recorded, and the slides and audio recording will be available online after the event. The Paris Agreement and the Sustainable Development Goals, both adopted in 2015, are frameworks for addressing key challenges facing communities, governments, companies, and individuals around the world in the 21st century. Achieving the commitments under the Paris Agreement and the SDG goals and transitioning to a global, low-carbon, and climate-resilient economy will take an incredible amount of collaboration and innovation across sectors and geographies, and rapid movement from talk to action. Scaling up sustainable investment rapidly and effectively will be a crucial element in this transition. According to CPI analysis, in 2015 and 2016, there was an average of $410 billion in annual investment across climate mitigation and adaptation globally, the highest amount to date in any two-year period, though this is a fraction of the estimated $16 trillion or so needed by 2030 to achieve a 2-degree pathway. It's clear that we need to move from billions to trillions, and the majority of that funding will need to come from the private sector. There are several barriers that stand in the way of scaling up investment in climate finance and green growth. These include policy and knowledge gaps, inadequate access to or a high cost of capital, and a key factor here is investor risk, whether real or perceived, which is particularly true within the context of developing and emerging economies. So how does the lab aim to tackle this challenge? The lab was launched in 2014 and seeks to address this investment gap by identifying, developing, and launching sustainable finance solutions that have potential to drive billions of dollars in private sector investment into low-carbon, climate-resilient projects in developing countries. The lab tends to focus on earlier stage ideas, and typically those ideas that seek to leverage public or concessional finance effectively in order to de-risk and catalyze private investment in key sectors. So who makes up the lab? We're fortunate to have an incredible network of global partners spanning across sectors. The lab's partners include investors and climate finance experts from governments, financial services firms, development banks, philanthropies, as well as corporate partners in other sectors, with CPI serving as the Secretariat. And finally, how does the lab work? We'll give some examples of the lab process in action later in the webinar, but our theory of change revolves around 5 main actions. Firstly, an open, global call for innovative investment solutions, which has brought in hundreds of ideas from a diverse group of proponents in our first 4 years. Successful proponents have really come in all shapes and sizes, and have included startups and entrepreneurs, large institutions from the public and private sectors, academics, as well as nonprofits and NGOs. The lab's call for ideas is truly open to all innovators. Once the call for ideas concludes, the Secretariat screens submissions against an established set of criteria to determine eligibility. Then, our global network of members, which you saw on the previous slide, works to select the most promising and potentially transformative ideas. The Secretariat, lab members, and working groups, comprised of other experts, then partner with selected lab proponents over several months to develop their concept into an actionable, bankable financial solution. And once the analytical phase has concluded, lab members vote to endorse the final instruments, signaling their readiness for launch and their full support. The focus then moves to fundraising to launch pilots with support from the lab network, moving from concept to action. In this phase, the Secretariat provides an additional 6 months of targeted support to help ensure endorsed instruments get off the ground and hit key implementation milestones. So on that note, I'll turn it over to Alex and Caroline to introduce you to 2 past lab instruments to illustrate the lab process in action.
Thank you, Ben. As Ben highlighted, the lab analysis focus follows a very rigorous standardized methodology that culminates in a lab instrument analysis report and hopefully in the endorsement of the instrument in the lab endorsement meeting in September. Further, we also provide post-lab support to endorsed instruments that can be more diverse. To demonstrate how this can look, we have prepared short case studies on 2 lab instruments. One of the instruments that was endorsed in September 2017, 14 months ago, is CRAFT. CRAFT is the first private equity fund focused on adaptation and resilience services and technologies. It uses a blend of commercial and catalytic finance to invest growth equity in adaptation and resilience companies in developed and developing countries to accelerate the diffusion of these products to developing countries. CRAFT addresses several barriers. First, it addresses the lack of capital that goes into the adaptation and resilience market. Second, it addresses the lack of availability of climate risk information, specifically for developing countries, which currently slows down investment in adaptation. CRAFT aims to catalyze a global market for climate resilient products and services, aims to promote climate resilient development, and will contribute to improving resilience standards and metrics. As part of the lab process, the lab analyst team has supported the proponents of CRAFT, the Lightsmiths Group, to refine their fund strategy. Further, we have defined the potential impact of CRAFT, built a financial model, and created scenario analysis to test fund economics and risks. We have also conducted interviews with experts from the public and private sector and enabled the fund managers to talk to people and institutions they did not have access to on their own, as the lab opens the door to talk about ideas and thoughts. Further, we have created impact case studies to provide examples of potential investments made by CRAFT to improve understanding of the type of investments that the fund would target. One of the major components of the lab process are the working groups. Every instrument has its own working group that is made up of usually more than 10 experts from the public and private sector. The working groups convene 3 times before instruments are endorsed and provide feedback on the process of the analysis and ask critical questions that need to be addressed, tailored to each instrument. This keeps proponents and the analyst team accountable to create a highly actionable solution. The post-lab support is highly tailored to the needs of the individual instrument. After CRAFT was endorsed, the lab proponents received seed funding from Nordic Development Fund and the Global Environment Facility to start fundraising in November 2017. CRAFT, however, has 2 parts. The investment fund is accompanied by a technical assistance, or TA facility, and the Lightsmith Group needed expert support to develop it further. As part of the post-lab support, lab analysts developed a strategy paper for the Graph TA facility, which was published in 2018. The paper outlined potential TA activities, created case studies with resilience companies, and outlined TA models. Further, the lab team convened potential funders for the TA facility for a workshop. This work culminated in a $2 million grant proposal by the Lightsmith Group to start technical assistance activities, which was also supported by lab analysts. We expect Craft to announce the first close of the fund as well as the TA funding early next year. I now pass on to Alex to introduce you to one of this year's lab instruments.
Thank you, Caroline. I'll briefly walk you through our second example, Pay-as-you-save for clean transport, or PAYS. PAYS was selected in the Lab's 2018 cycle and endorsed this past September. The primary barrier to the adoption of electric buses in cities around the world is their higher upfront cost, driven mostly by the cost of batteries and charging infrastructure. This is slowing the uptake of electric buses, even in cities where electric buses are cheaper over their lifetimes than diesel buses. PAYS is a financing mechanism for lowering the upfront cost of electric buses. In a PAYS transaction, the electric utility that would provide electricity for the buses invests in the batteries and charging infrastructure and then recovers the costs through a fixed charge on the bus operator's electricity bill, which is paid for through the operating cost savings made compared to diesel buses. This can help bus operators to accelerate bus fleet electrification at no additional upfront cost and make operating cost savings from day one. Meanwhile, the utility increases electricity sales through a low-risk investment, and emissions of both greenhouse gases and tailpipe emissions of harmful airborne pollutants are reduced, including carbon monoxide, nitrogen oxide, black carbon, and fine particulates. Between February and August this year, the lab helped to refine the PAYS instrument mechanics and identify priority countries for implementation, developing a financial model for 6 priority cities, and conducting extensive engagement with stakeholders in a range of promising markets. At the endorsement meeting in September, PAYS proponents, Clean Energy Works, signed a Memorandum of Understanding for implementation in Cape Town, South Africa. Clean Energy Works was also awarded a feasibility study grant from the Convergence Blended Finance Network just last month. The choice of city in which to conduct the study will be made in the coming weeks, alongside progress towards an initial implementation in South Africa as we move into 2019. With that, I'll hand back to Caroline for a look at the lab's impact to date.
Thank you, Alex. Over the next couple of slides, I will give an overview on what the lab and endorsed instruments have achieved so far. The lab has endorsed 35 instruments that have so far mobilized almost $1.4 billion in sustainable investment. This is a remarkable feat, particularly because most of this has been mobilized by instruments from the first 2 years of the lab. Last year's instruments are still in the middle of their fundraising process. The graph on the right-hand side shows that 46%, nearly half of the total mobilized finance, comes from private investors. This highlights the attractiveness of lab instruments for investors and reflects the lab's strong focus on developing a pathway to commercialization of every instrument. On the left-hand side, you see that the types of investors in lab instruments are very diverse. During the lab process, we try to develop strategies that are tailored to fit the requirements of specific groups of investors, such as institutional investors. Most pilots use a mix of public and private capital, and public sector actors provide the catalytic finance to demonstrate the lab instrument's business model and enable future replication with a higher share of private finance. Lab instruments address investment challenges across the globe. The graph on the left-hand side shows how diverse the regions are that the lab instruments target. Further, past lab instruments have strongly focused on mitigation, but the lab is an advocate to support adaptation ideas. In the past, adaptation instruments have usually been more complicated and smaller than mitigation ideas, but the lab aims to address the most challenging sustainable finance issues, and many of these are related to adaptation. I will now pass it back to Alex to talk through this year's call.
Thank you, Caroline. Over the next few slides, I'll walk you through this year's Call for Ideas, explain what we're looking for, and what the process looks like. We'll be happy to answer your specific questions at the end of the webinar. As Ben mentioned earlier, the lab looks for innovative, catalytic ideas for financial instruments that can accelerate climate-related investment in developing countries. We're interested in both climate mitigation ideas that reduce greenhouse gas emissions and adaptation ideas that build resilience to the effects of climate change. In this year's Call for Ideas, the lab is particularly interested in 4 main priority areas. First is blue carbon, mitigation and adaptation ideas for driving investment into coastal and marine ecosystems. Next, sustainable cities, where we are looking to support ideas for sustainable urbanization across buildings, transport, and energy systems. This is in collaboration with the Global Covenant of Mayors, C40 Cities Network, the International Council for Local Environmental Initiatives, otherwise known as ICLEI, and others. The lab will also be supporting 2 ideas in sustainable agriculture for smallholder farmers, specifically those targeting West and Central Africa. The final priority area is sustainable energy access, supporting ideas that target the deployment of renewable energy for economically productive use. Strong ideas in climate mitigation and adaptation lying outside these 4 priority areas will also be considered, so please do apply even if your proposal doesn't clearly fit within the 4 priority areas here. The deadline for submissions is midnight US Pacific Time on 19th December. Applicants will be notified of selection in February. Idea submissions are assessed against 4 criteria, which are also available on our website and on the submission form. First is actionability. Strong candidates will identify entities able to implement the idea and a clear pathway to doing so, including a defined time frame, key activities, and project milestones. They should also identify potential challenges and strategies for dealing with them. Next is innovation. Good applications will demonstrate how the idea addresses barriers to climate finance that have either not yet been addressed or will be addressed more effectively than existing approaches in the market. Third is catalytic potential. We are looking for clear potential to mobilize private sources of climate finance within a large market, as well as potential for scale-up in the target market and eventual replication in other markets. The best ideas will also deliver positive socioeconomic, development, and environment impacts. Last but not least is financial sustainability. Good ideas will have a clear strategy for phasing out public financial support over time and achieving market viability on commercial terms. They should also identify challenges and risks in achieving these objectives and strategies for managing them. Selected instruments benefit from expert guidance from leaders in climate finance, drawn from the lab's membership across public and private sectors, as well as CPI's broader network of experts. This support in the form of technical guidance, political capital, and potentially also financial capital can be extremely valuable in getting instruments off the ground. Since inception, lab members have invested $250 million directly into lab instruments, while total investments raised stands at almost $1.4 billion US. Selected instruments will also receive intensive analytical networking and communication support valued at approximately $200,000 US from CPI, the lab secretariat. Once ideas are selected, they go through a development phase from approximately February to August, refining instrument mechanics, developing financial models and impact assessments, identifying risks, and developing an implementation plan. In September, lab members convene and vote on whether to formally endorse each instrument, in preparation for which CPI's analytical and communications teams help develop core promotional materials, and where proponents have the chance to pitch to potential investors and donors. After endorsement, proponents shift focus to implementation, receiving light-touch CPI analytical support on 1 or 2 further deliverables, with ongoing networking and publicity support. With that, I'll thank you for joining us today and hand back to Ben, who will moderate a Q&A session.
Thanks so much, Alex. So at this point, we will go ahead and open it up for questions and answers. If you'd like to ask a question, please type it into the chat box on the bottom right of your screen. And we'll now just wait a few minutes to gather questions. Thanks so much. Thanks for all of the terrific and very relevant questions. Just want to go through a few, and then we'll take another quick break to gather our thoughts and allocate the answers across the team. But there were a few questions that came in on the application process and the lab process. So just on how detailed the application should be and if there's a specific format. So we do have a quite specific format on our website that's comprised of a number of multiple choice and drop-down questions, as well as essay questions that are basically divided by the 4 core lab criteria: innovation, actionability, catalytic potential, and financial sustainability. You will need to go to the lab website and click on Submit an Idea. You'll sign up for an account there, which is very quick, and you will then have access to a fixed form. In terms of basically how detailed the applications should be, we would encourage you to, within the word limit specified, provide as much context as possible on your idea, on your potential partnerships, and basically to make the case for how the idea addresses the lab criteria. There were also a number of questions that came in on funding. So what is the magnitude of funding for each selected idea? What is the average funding awarded? So just to be clear, there is no fixed funding amount that is provided when you are selected by the lab. So lab members have been extremely active as investors into the lab instruments that have come out. As Alex was speaking to a bit earlier, around $256 million has been invested by lab members, and those instruments have gone on to catalyze or mobilize an additional about $1.2 billion of investment from other investors or at the project level. So lab members have been very active in investing, but what you do get is access to that network, which is quite valuable, and then of course around $200,000 of in-kind support from the Secretariat to develop your idea over that year-long period, including the initial analytical phase and the continued support. So hopefully that addresses a few of those questions. In terms of the form of funding, I know there were a couple questions about, is funding ever given in the form of grants, and how much involvement does the lab give on ideas? Hopefully that will address that question. So often, in terms of the forms of funding offered, that really depends on the needs of the individual instrument. Often there will be grant funding provided at the beginning that will then lead to sometimes concessional funding, obviously with a vision toward bringing in commercial capital at some point in the implementation pathway to meet that financial sustainability criterion. But again, that is based on the needs of the instrument and fundraising that would take place after the lab analytical process is completed. I'm just going to pause now for a couple of minutes to gather some more questions, and we will be on to respond in a second.
So we also got a few questions on the lab process. One was on whether we encourage a consortium of partners to apply and whether it's allowed or encouraged. Usually lab instruments have been proposed by one or two institutions, or like a group of people. I experienced that strong lab proponent teams are made up of usually 2 people because they it's quite time demanding over those 6 months, also from the proponent team, and it's usually stronger if there's an organization in place that really backs the instrument. However, partnerships don't have to be in place yet for an instrument to be selected. So if you know that you're an institution and you have an idea, but you need like an implementing partner, or if there's a partner that you need to really get your idea off the ground, that's something where the lab can really add value and help you to make connections and find that partner. And another question I saw was on the 3 main challenges and 3 main opportunities for the type of innovation instrument and for applicants. And I really think that you need to think about the financial sustainability of your instrument. So whether there is a road where at one point you don't need any concessional finance, such as grants or concessional loans anymore, but you can phase public finance out and really get it completely privately financed. So that can, like the pilot, for example, has usually stronger public support, but thinking about how to scale and replicate an instrument, you really have to think about how can this finance be phased out, and that's also something we can work on during the lab process, but it's something you should have an idea already for in your application. Also, in general, on scalability and replicability, you should have an idea like that can be maybe replicated in another country or for another organization. So it shouldn't be so specific that it can only fit your one specific case, but it should be able to be replicated and scaled.
I'll just address a couple of practical questions. There is a record online of previous ideas, which can be accessed at the web link that's provided on the slide that's currently up. If you navigate to that link, there is another link at the top of that page called Ideas, where you can access a database of all previous ideas. And then secondly, on PowerPoint availability, there have been a couple of questions asked on that. The full recording of the webinar will be available within 5 business days.
Thanks, Alex. And just to add a couple points there, the ideas that are available online are those that have been previously endorsed. We do not publicly post submissions to the lab, but if your idea is selected to go through the process, we of course want to highlight that on our website. So hopefully this is helpful context if you want to go in, scroll through the ideas, and get a better idea beyond the introduction that Caroline and Alex gave on this webinar of what kinds of ideas have been successful in the lab thus far, and also ensure, as one of the attendees mentioned earlier, that your idea isn't replicating something that has already gone forward. And just to build on what Caroline had said, is there were a couple of questions that came in about what stage ideas should be in when they're applying to the lab. So while the lab does focus on earlier stage ideas, just because of our kind of leverage point and where we can really contribute the most, ideas have varied in terms of stage and pilot operations. So generally, we're looking for things that are pre-pilot or with a small pilot operating. If a project or an instrument is already fully rolled out, then there's just less that the lab could do to contribute to that. But there's no sort of fixed rule about stage. It's really an assessment of where the lab could have the most value, as well as eligibility against the 4 core criteria. There was also a question about whether a group can submit multiple ideas. We would absolutely encourage individuals or institutions that are interested in being lab proponents to submit multiple ideas. Those can span across priority areas as well. There were other questions about regional ideas that may fall outside of the area specified, for instance, on climate smart agriculture, that may be targeting Central or South America rather than West and Central Africa. Again, we would certainly encourage all submissions that target developing and emerging economies in mitigation and adaptation, not just ones that fit under the stated priority areas. There was also a great question about how time-consuming the process is for proponents. It's certainly quite an intensive process, especially over the initial few months of the analytical phase. We would certainly encourage any proponents who are applying to be prepared to dedicate a significant chunk of their time to the instrument development process, to the working groups. So we typically have 2 analysts on the CPI side that are putting about 50% of their full-time job into this. It may not be quite that much on the proponent side, but it is a significant ask. Of course, the amount of time for individuals will vary depending on the size of the team. As Caroline spoke to earlier, often our proponent teams will be 2 or sometimes a bit more people, which can help to ease the burden on those institutions. But with that in mind, we've always heard from our proponents at the end of the process that it was very much worth their while, and we've generally had pretty stellar reviews from proponents who have come through that it was really incredibly valuable and pivotal in getting their ideas off the ground. There were also some questions about numbers in terms of how many ideas we normally get for a call. This has varied significantly, and it will be different from stream to stream. But last year, within the global lab, I believe we had about 100 submissions overall across the streams. There was a question that came in describing a company and presenting an idea on building adaptive capacity for smallholder farmers in Africa. So just to say that we won't comment on specific ideas on this webinar. We would certainly encourage everyone to submit if they think their ideas are relevant based on the lab criteria on our website, but just to keep things keep everything neutral, we won't be giving particular comments. But just to say to really reiterate that we're looking for ideas that are innovative financial instruments or mechanisms, and ideas that really use innovative financial structuring or a financial product to overcome market barriers and risks to financing and achieving commercial sustainability within key sectors in developing countries. So we're not looking for kind of pure technical assistance projects or companies or products or services that don't have a financial element to them. There are a number of other incubators and accelerators that are more focused on that realm, but the Global Innovation Lab for Climate Finance is really focused on financial tools.
There was also an idea about question, about ideas in the scaling up process, which is similar to an existing funded project. It's difficult to say clearly whether this will or will not be a problem, but just recall that from the lab assessment criteria, we're looking for innovation as one of them. So the instrument in question would need to clearly demonstrate that it's doing something addressing barriers that have not yet been addressed. So it's unlikely that if it was in the same market addressing the same barrier and there was already something in that market trying to do the same thing, that it would be successful. But potentially if it's addressing a barrier in another market where there are no competing ideas doing the same thing, there's more of a possibility. But again, I would refer you to the criteria against which your idea will be assessed.
There are also a couple of questions that came in about public institutions submitting in a high income country. There is nothing prohibiting that, and in fact we have had some successful proponents from public institutions in developed countries, but the key point here is that whatever your idea or your proposal is, that will need to target and benefit developing and emerging economies. So it would not be eligible if it was focused on a developed market, but it is absolutely fine for institutions that are based in developed markets to submit. Also a question coming in about a prohibition against leveraging other sources of financing into the submission. We don't have a prohibition against proponents submitting in the event that they are already funded from another source, as long as there's a key case to be made for the lab support and a need to build on that initial funding. Yeah, another question came in about why the focus on West Africa and whether ideas in East Africa that are targeting sustainable agriculture would be eligible. So this year we've launched this stream as a collaboration with the International Fund for Agricultural Development. And initially for this year's call, we are focusing on developing 2 instruments that are targeting West and Central Africa. That area, I believe, about 60 or 70% of employment comes from the agricultural sector. So that's a key reason why we're using that area as really a test case, and there is a vision to expand that stream in the future, but we would still certainly welcome submissions that target other regions in our general call as well. Just to reiterate, as we've said before, even submissions that are outside of those priority areas, we would certainly welcome as long as they meet the lab criteria and focus on developing countries. A question just came in asking whether we've considered opening an Africa lab. This is absolutely something that we are looking into, and we're in active discussion with lab members and other partners around the continent with an aim to actually launch a regional lab in Africa next year. The stream this year focusing on smallholder farmers in West and Central Africa is an initial move towards that in the context of the Global Lab, but this is certainly something that we are actively interested in. There were also some questions about the number of instruments that came in. I think someone who had asked that question was the audio wasn't working. Just to say, we did receive about 100 submissions to the Global Lab across streams last year. So this is a highly competitive process. But one key point here is, even though a small number of ideas will be selected, all eligible ideas that are submitted will actually go in front of the lab members, so they will have access to that and have the chance to view your submission as long as they are deemed eligible according to lab criteria, even if they're not selected. So there really is a key value add in getting this out there, even for the ideas that don't end up being selected. We would certainly encourage you to submit, and if you have any questions about eligibility or want to talk through your idea further, while we can't give official input, we're glad to answer questions about the lab criteria after the webinar as well. Okay, so there's been a couple of questions that have come in about IP. So just to say that CPI does not have a financial stake as the Secretariat in the success of lab instruments. The work that is conducted through the lab process is shared publicly as a not-for-profit institution. It's crucial in our mission to share learnings from the work that we do. With that in mind, we certainly take many efforts to protect proponent IP and anything that is considered commercially sensitive for the proponent institutions that we are working with. We will do what we can to ensure that is protected. So that should not be a concern.
So we're nearly finishing our Q&A session, but we found there was another question on instrument or project replication and if such submissions could still be considered. So we had in the past, I've definitely reviewed applications that had similar ideas than were already endorsed in the prior years, but replicated them in a new context. So these are considered if you can prove that this hasn't been done in this region yet. So for example, I think also a good general example is PACE, the instrument that Alex talked about, which is it's a mechanism that has been used by utilities in the US to finance energy efficiency. And then the idea was also that idea was used by the proponent to apply to public transport in emerging markets. So that's also another way how you can use existing mechanisms and really innovatively apply them to new contexts.
Great. Well, it looks like we're at time. Hopefully we were able to answer most of your questions. If not, please feel free to reach out to us via email. We will be following up shortly with all registered attendees with a recording of the webinar and the slides. And yeah, at this point, we'd just like to say thanks so much for your interest and questions. One quick point, if you're interested in learning more about CPI's work tracking global investment for climate change, on November 27th, we'll be hosting a webinar to announce the latest update to our global landscape of climate finance, which will feature an in-depth look at finance for the implementation of adaptation and resilience in developing countries and new data on investments in electric vehicles. You see a little link to our website right up there. You can find more details on our webpage. Thanks so much.